All right, today we're jumping into the really fascinating and, let's be honest, kind of confusing story of a biotech company called Evaxion. They just put out a business update, and what happened right after? Well, it's a classic market puzzle. So, get this. On one side, you've got the company's management saying everything is great. They're talking about strong operational momentum and how they've de-risked their finances. Sounds good, right? But then you look at the market's reaction, and the stock tanked, closing down almost 6%. It just doesn't add up.
And that's the big question we're going to dig into. Is the market seeing some huge risk that the company's trying to gloss over? Or is management setting the stage for something big that investors are just completely missing right now?
To figure this out, we have to follow the money first. Evaxion made some really smart, deliberate moves to get their finances in order. And honestly, understanding these moves is the key to this whole story. You got to remember the context here. It's a really choppy, tough market for small biotech companies right now. So instead of just waiting around for trouble, Evaxion decided to get ahead of it and clean up its financial house. And their biggest move was this thing called a debt-to-equity conversion. So what is that? Well, basically, they went to a huge lender, the European Investment Bank, and said, hey, instead of us paying you back all that cash we owe you, how about you just take shares in our company instead? It's a pretty powerful way to wipe debt off your books. And we're not talking about small change here. The deal converted 3.5 million euros of debt. That's a massive amount of debt just gone, wiped clean from their books, and replaced with equity. That puts them in a way healthier position. But here's where it gets really interesting. It's the price of that conversion. The EIB didn't just get shares at whatever the stock was trading at. No way. They agreed to a price that was an 89% premium. That means they paid way more per share than you or I could have on the open market. That's not just a transaction. That is a huge vote of confidence. So what's the bottom line here? What did all this financial maneuvering actually get them? Well, it extended their cash runway, that's the amount of time they can operate before they run out of money, all the way to the middle of 2026. And that date is so important. Why? Because it gives them breathing room. It's fuel in the tank. It means they have enough cash to get past some absolutely critical milestones, which we're going to talk about in a sec, without the crushing pressure of having to go out and raise more money. Okay, so the money side looks solid. But, in biotech, that's only half the story. It is all about the science. So now, let's look at the actual engine behind Evaxion's potential, its AI-powered drug pipeline. At the very heart of everything they do is their AI immunology platform. Think of it like this incredibly smart, high-tech discovery engine. It uses artificial intelligence to find and design brand-new vaccines for some of the world's most difficult diseases. Everything from cancer to nasty infectious diseases. And you can see just how powerful this thing is when you look at what they're actually working on. I mean, this is not a one-trick pony. They're building a personalized vaccine for melanoma, a preventive one for Strep A, another for a virus called CMV, and they're even working on a whole new kind of polio vaccine. That is some serious range. And look, it's one thing for a company to hype its own tech. It's another thing entirely when you get big names to back you up. They're getting that outside validation. The big one? A grant from the Gates Foundation. When an organization like that puts its stamp of approval on your platform, it sends a really powerful message. But the biggest test of all, well, it's coming up fast. Their lead cancer vaccine is going to be presenting its 2-year data at the ESMO Congress. And as their CEO says right here, this is one of the most important stages in the entire world for cancer research. The stakes? They literally could not be higher. So, let's recap. We've got a secure financial position. Check. We have a very promising technology platform. Check. Now let's look at the calendar. Because the next year or so is absolutely packed with what you could call moments of truth for Evaxion. And this right here is their catalyst map. It's their road ahead. On October 17th, bam, we get that pivotal 2-year data at ESMO. Then, sometime in the second half of this year, the pharma giant MSD has to decide if they're going to partner up. And then in 2026, we get even more long-term data. It's just one huge event after another. And just think about what's at stake here. Good data at ESMO, That could land them a massive partner. A yes from MSD, that's cash in the bank without selling more stock, plus another giant stamp of approval. Any other deals they sign just further prove how valuable their AI platform really is. Which, brings us right back to where we started. All of this lays out a really clear dilemma for anyone looking at this company, and it boils down to two simple words: promise versus proof. It's like you have two totally different stories being told at once. On one hand, you have the promise, a financially stable company, a validated AI platform, and a crystal clear map of events that could unlock huge value. But on the other hand, you've got the need for proof. This is still a tiny, risky biotech stock in a market that's being super picky right now. And at the end of the day, investors are waiting for cold, hard data. So, for the people who are bullish on this, the ones who think the market is missing something big, here's their argument. It's a pretty simple three-step play. Step 1, the foundation is solid. The company is financially stable. Step 2, they've got two huge shots on goal coming up: the ESMO data and the MSD decision. And step 3, the payoff. If either or both of those go well, the stock could get revalued at a much, much higher level. And what's important to see here is that this isn't an all-or-nothing bet. There are multiple ways for them to win. Success with their cancer vaccine is a huge piece of the pie, yeah, but a partnership with MSD or other new deals could create massive value all on their own. So let's circle all the way back to that initial stock drop. What did the market see? It saw a tiny biotech company with a lot of question marks, and it basically said, nope, too risky for me, I'm going to wait and see. It focused on the uncertainty. But what did management present? A completely different picture. They're basically saying, hey everyone, we've taken the financial risk off the table, and now we're standing right at the doorstep of a series of game-changing events. They're focused on the opportunity. And that leaves us with the final million-dollar question. Is the market completely overlooking a carefully de-risked company that's on the cusp of a breakthrough? Or is this just another classic high-stakes gamble in the wild world of biotech? The promise is clearly there, but now we all just have to wait for the proof.